Hi, so one of the questions that we oftentimes get asked from clients is, how do I create an effective tax provision model? And it's actually a very good question from the standpoint that an effective tax provision is one of the cornerstones of a smooth audit. And at Clifton Douglas, we've spent a tremendous amount of time trying to perfect our tax provision model for optimum effectiveness, which then in turn leads to a smoother audit. So from that standpoint, my response right off the bat when people ask or companies ask us these questions is make sure that your current tax provision model is first and foremost aesthetically pleasing. If the tax provision is such that you've got run-on pages, the fonts are all different, when you print, nothing is spaced to the page, basically it doesn't look like a nice form of craftsmanship, a nice piece of craftsmanship, then certainly send it back, because realistically, if you don't want to review your tax provision model, your auditors are going to have a hard time reviewing your tax provision model as well. So again, in order to create an effective tax provision, your first starting point is making sure that it is aesthetically pleasing, that it's a nice piece of craftsmanship that you can easily go through, as well as your auditors can easily go through. So that's first and foremost. Beyond that, there are certain features that we've developed at Clifton Douglas over the years that have really helped to make our tax provision model one of the most effective that we've seen out there on the market. So one of the first features that we really find very helpful in our tax provisions is we include a linked table of contents. A table of contents just in general is so helpful in a tax provision because you're dealing with these voluminous tax provision models with all these different schedules. And so the table of contents really creates a roadmap so a company can kind of look through and see how everything's organized. Same thing with the auditors. They get an idea as to how they need to structure their audit review or their company review. And even going beyond that, having a linked table of contents helps tremendously because you can navigate pretty easily through these voluminous schedules. You can go from the deferred inventory back to the effective tax rate schedule and so forth. It just helps the reviewer tremendously to have this linked table of contents in order to navigate the overall tax provision. We also have found that an executive summary is very helpful with respect to expediting the review of a tax provision. And the executive summary is really a schedule that provides the highlights of the tax provision. Really, what was important that happened during that year related to the tax provision that the reviewer can go through and read over in about 5 minutes and get a pretty good grasp as to that company's basically what their tax results were for a specific period. That includes, again, their effective tax rate for the period, their tax expense, deferreds, any FIN 48 related issues or ASC 740-10 issues, anything related to new tax developments or new pronouncements and how they impacted the company. Maybe they went IPO, maybe they had an acquisition or divestiture, how those impacted the tax provision model. Basically, all of the key components, all of the key elements and results from that tax provision should be summarized in an executive summary that provides to both the company reviewer as well as the audit reviewer just a snapshot of what's important so that it helps them really manage the time, the review time in terms of their audit review or their company review, in terms of what are the key aspects, what do they really need to be looking at, what's really material with respect to this tax provision. So again, that executive summary really helps the reviewer to hone in on the key aspects of the tax provision. In addition, we've also found that a procedures checklist it's kind of an internal control sort of a document, but adds a lot of credibility with respect to the tax provision from the standpoint that the checklist delineates every single task that was followed in putting together that tax provision model and needs to be signed off by both the preparer as well as the reviewer. So again, it affords this bit of additional credibility for both the company as well as the auditors when they're reviewing that in fact all of the steps required to create an excellent or an effective tax provision that is accurate, thorough, and complete, that all of those steps have been followed. So again, just jumping into the review, the reviewer automatically knows right off the bat that there's a pretty high likelihood that this tax provision is in fact sound, because all of the steps necessary to create a sound tax provision have in fact been followed and have in fact been signed off by both the preparer as well as the reviewer. So again, another nice addition that reviewers like to see and that help expedite the process and add additional credibility. Beyond that, Clifton Douglas incorporates a feature that I don't see that often but is really helpful from a review perspective, and that's a diagnostic schedule. And a diagnostic schedule really tries to summarize those key numerical relationships that are in a tax provision and really summarize those on one schedule so that the audit reviewer or the company reviewer doesn't have to go through and kind of hunt and tick and tie all of these items. I mean, we list out every one of these values and their numerical relationships so that a company or a reviewer can easily look and say, oh, okay, these two values need to be equivalent, and they are. And all of these numerical relationships are listed in one schedule, and if in fact there is a variance, it'll show up in bright red on that schedule. There should be no variances, and so there shouldn't be any red on that schedule whatsoever. But what the diagnostic schedule allows the audit reviewer to do is basically to eliminate that excess time related to digging for these numerical relationships and making sure that they're accurate. Instead, the diagnostic schedule summarizes all of these numerical relationships, all of these values, and shows the reviewer that in fact they do tie out. So it helps the reviewer tremendously in terms of pinpointing what those numerical relationships and values should be, and then also validating that in fact they do tie out, that in fact they are equivalent where in fact they should be. So that's very helpful. Along those same lines, we also include a lot of proofs and reconciliations in our tax provision model. For example, if you look at the effective tax rate and the tax expense, those two items, those two schedules, there shouldn't be a variance between them. So we include a numeric formula, in which case, we basically have, there's a line item that shows whether or not there is in fact a variance relating to those two schedules. And if there is, obviously we need to correct whatever the discrepancy is. But again, the reviewer doesn't have to go through and hunt and make sure or figure out where the discrepancy lies. And even if there is a discrepancy, there's a formula that points out right off the bat whether or not there's a variance, whether or not there's a discrepancy. So it takes out a lot of this additional review time in terms of digging and hunting for these discrepancies and these variances that really should be just already included from a formulaic standpoint so that they can kind of check off on their review everything's been taken care of. Along those same lines are really charts and tables throughout the tax provision. And we mostly include these from the standpoint of flux analyses, really looking at changes from one period to the next. And so the flux analyses from the company management standpoint help tremendously when they're looking at how their operations are actually impacting the tax provision. They can look and say, oh, my effective tax rate increased from one year to the next or decreased from one year to the next, and really focus on what the drivers were of that increase in the effective tax rate. What were the drivers of the increase or decrease in the tax expense, and understand how their company operations are in fact impacting that tax provision. Then from the audit standpoint, again, these flux analyses in terms of charts and tables are really important from the standpoint of reasonableness. It doesn't make sense that based on our flux analyses tables that the effective tax rate did increase 20% from last year, or did it decrease 20% from last year? Was there a significant event that led to this increase or this decrease, or is it really just a numeric miscalculation that we need to go back and fix? But again, it allows the auditor to see these relationships and to, at a glimpse, see whether or not they're reasonable based on prior years, or if there's a big change, really dig in and figure out whether or not, or what that change is, and whether or not in fact it's accurate. So again, charts and tables are really helpful to both company management from an operations standpoint, as well as to auditors from a reasonable standpoint, an audit review standpoint. Also, we really like to see in our tax provisions, and we spend a lot of time on this, is consistent referencing throughout the tax provision. And we have picked a very specific referencing system, in which case we've got all of our references in bold red, and it's all consistent throughout the tax provision from beginning to end, so from the footnote all the way down to the source documents. And the primary reason that we do this is at Clifton Douglas, we really dislike hard-coded numbers in a tax provision. All numbers should have a source. They should be linked to some source data if possible. There are situations in which case you're using prior year tax provision data, or if you're using a tax return, and in those cases obviously those numbers are hard-coded, but we still know it's from a prior tax provision or it's from a tax return. But that really is the anomaly. The norm in our tax provisions is that every single number, every single significant number that appears in the tax provision has a source and is referenced accordingly. It's not just, the significant final schedule is referenced or a few schedules are referenced. It's referenced from the source data all the way through to the footnote, and it's consistent throughout. It helps the reviewer tremendously to understand where numbers are coming from and where numbers are going, and not have to sit there and figure out, looking at a hard-coded number, does this make sense? How did they get this hard-coded number? Where did it come from? Where's the calculation? That slows down the review process tremendously. But if they've got all of the source data right there and they can see the calculation, see where all the numbers came from, the review goes so much more smoothly. So again, a consistent referencing system is really key. Also, we really put a lot of time and effort into including preparer's notes and reviewer's notes in our tax provisions. And this comes from our belief that the tax provision should stand on its own. That basically you don't need extraneous documents in terms of memoranda, in terms of extraneous calculations, in order to do a thorough, accurate review of the tax provision itself. That all of the information that's necessary for that review is in fact encased within that tax provision. Certainly the review can be bolstered by looking at an outside memorandum or an outside calculation or tax law to a certain extent. But really, in order to do a thorough, accurate, concise review, all you need is the tax provision. And the preparer and reviewer's notes help tremendously because positions taken, interpretations made, assumptions made, estimates that are calculated, all of that is housed directly in a prepare and reviewer's notes section right under the schedule to which it pertains. So you're not sitting there trying to figure out, okay, well, why did they apply this calculation? Why did they use this particular percentage or this tax rate? What changed during the year? What was the new tax development that led them to maybe change their tax rate or change their calculation to a certain extent? What was the accounting pronouncement that created the need for this accrual? Any of those types of things, any estimates, any assumptions, any interpretations, all of that is spelled out very specifically in the prepare and reviewer's notes, and that just helps the reviewer tremendously when they go back through. They go over all of these key items so that they can understand the rationale behind all the data that is in the tax provision themselves. So again, when companies ask us this question about, again, how to create an effective tax provision, we're always excited because it's a really important part, one of the cornerstones of leading to a smooth audit. And so we take it very seriously. And again, the very first thing is to make sure that your tax provision is aesthetically pleasing, that it's a nice piece of craftsmanship and that you can go through it easily. It's easily reviewed. That'll take off a tremendous amount of review time. Beyond that, including certain features that really help the reviewer along, like linked table of contents, like executive summaries, like procedures checklists, all of the proofs and reconciliations and diagnostic schedules and charts and tables, as well as consistent referencing throughout and preparers and reviewers' notes. All of these items are just going to help that reviewer get through the tax provision as quickly and efficiently and accurately as possible. So again, if you'd like to know more about our tax provision model or tax provisions in general, you can visit us at cliftondouglas.com, or you can give us a call. I hope this has been helpful, and have a great day. Thanks so much for watching.